prices of our day-to-day goods are still, up there. I don't think any prices of anything is actually declining yet. Yeah, but the numbers would always say, but we're still patiently waiting for it to reflect in our day-to-day activities and buying.
Okay, so for the first time in our lifetimes, right, Nigeria is telling Europe where its aviation fuel is coming from. In June, Dangote's refinery shipped 466,000 metric tons of jet fuel to Europe, and that is more than what the US did in the same month. The US shipped about exactly 399,000 metric tons of jet fuel. Nigeria's capital markets regulator just made a very deliberate move in the future of money. Now we're moving on to the future spotlight, which my co-host will be taking.
All right, so let's talk about the future of finance, right? So the SEC, that is Securities and Exchange Commission, cleared 7 fintech firms for digital assets. So the Nigeria Security and Exchange Commission, SEC, has granted approval in principle to 7 fintech and digital asset firms for admission into the Accelerated Regulatory Incubation Program, ARIP. The firms are the Bitbata Technologies Limited, the Luno Fintech Nigeria Limited, Get Equity Limited, CoinCoin Global Network Limited, Rap CBDC Ltd, Trovotech Ltd, and BlockVault Custodian Ltd. So these are the 7, fintech firms that has been cleared.
Welcome to another episode of Across Markets on B360 TV. My name is Joy Abia, and I remain your host on the show. And with me always, I have
Vera Ifechukwu, also your host here on the show.
Amazing. Hi, Vera.
Hi, girl.
It's always a pleasure to sit beside you.
Always.
It's always a pleasure to sit beside you and, drop the news to our lovely audience. Okay, so for the first time in our lifetimes, right, Nigeria is telling Europe where its aviation fuel is coming from. In June, Dangote's refinery shipped 466,000 metric tons of jet fuel to Europe, and that is more than what the US did in the same month. The US shipped about exactly 399,000 metric tons of jet fuel to Europe. Now, a country that could not even refine its own crude for over 40 years is now a swing supplier for the global aviation markets. So what is all of this going to tell us in today's episode? Join us as we dive deep into all of these stories. This is Across Markets. So if Nigeria is now a major supplier of refined petroleum products to Europe, what does that mean for the assumption that Africa produces raw materials and the West adds value? And who exactly inside Nigeria is capturing the financial benefit of this reversal? So to understand what this means for Nigeria's economy, we need to look at what's happening at the macro level, as always. Now we're moving on to the economic pulse.
Let's get deeper into what we have regarding the economic pulse. So this is a structural economic story. All right, so the Dangote refinery reaching about 650,000 barrel per day full capacity in February 2026 coincided almost precisely with the Strait of Hormuz disruption. So Nigeria's 4 refineries in Port Harcourt, Warri, and Kaduna operated at near zero capacity for most of the 2010s and early 2020s, forcing the country to spend billions in foreign exchange importing petroleum products. NNPC's subsidy bill ballooned, and the removal of the first subsidies in 2023 was partly the precondition for private sector refining to become commercially viable. The Dangote refinery began commissioning in May 2023, started petroleum production in September 2024, and reached full capacity in February 2026. Now, the entire arc from Africa's biggest import bill to Europe's top jet fuel supplier has taken less than 3 years from commissioning, right? So, and right now, Africa's Finance Corporation warned in April 2026 that Africa faces an 86 million ton fuel shortfall by 2040. The Strait of Hormuz closure has accelerated East Africa's exposure to fuel choke points, while West African, anchored by Dangote, is insulated. This creates a continental asymmetry. Nigeria is not just an exporter to Europe, it's also a potential it is also a potential swing supplier to East Africa. South Africa and other African governments were already in discussion with Dangote for long-term supply agreements as of March 2026. Now, the refineries planned IPO targeting up to 10% of equity on the Nigerian exchange in 2026 would turn this industrial story into a capital market event. So now, Dangote refinery exporting about 466,000 metric tons of, jet fuel to Europe, ahead of US 399,000 metric tons. This is bigger than just oil, right? This is not just about the petroleum. It's about value addition, and instead of exporting crude, Nigeria is exporting refined products with higher economic value. So what this significantly means for businesses is that downstream distribution is the next value chain to disrupt. The refinery has solved the supply problem and, logistics, storage, and retail distribution of refined products, both for exports and domestic delivery. Also, for SMEs, fuel costs are a major operating cost for most Nigerian SMEs. The refinery's domestic supply capacity should translate into cheaper fuel for generators and vehicles, and of course machineries. Also, for investors, the Dangote refinery IPO is now a fundamentally different proposition from what it was in 2024. A refinery that can, out export the US to Europe during a global energy crisis is priced as a global energy infrastructure asset, not just a domestic fuel pay. Also, to consumers, jet fuel prices affect airline tickets prices. So if the 300% cost hike for Nigerian airlines persists, fares will rise. And the policy question for the government is whether it enforces price discipline in the downstream distribution chain or allows middlemen to continue extracting margin from both the refinery efficiency and consumers' necessity.
All right. Thank you, Vera, for that. So we're moving on to the sector signal right now, and this is actually very interesting because PC, or rather PZ Cussons, which are the producers of most of the FMCG goods that we know, has actually recorded huge gains, and I'm going to get into the numbers just really soon. But then because this is interesting, because just last week when I was writing this article, I think, on how inflation is affecting customer spending or consumer spending, basically. And I looked, read deeply into it, and, I'm just realizing that the FMCGs, there's some, strategies that they're applying to make sure that they are still relevant in the market with how inflation. First of all, we've even been reading on the show for maybe the past how many episodes that inflation has been dropping. It's recorded that inflation is dropping across African countries, right? Especially even in Nigeria. However, it does not quite translate into, the real buyers' expense, consumer expenses, right? So I was reading that, and it was really interesting to see that the most of the survival tactics that businesses are going to use to push, still stay relevant when even the inflation falls down, is just going to be some tactics about still deploying customer loyalty, or everything that still shapes around the customer trust and loyalty, everything that keeps them understanding your value other than just like just buying for like the day or buying to use and because it's cheaper, but still retaining value is important. But like I said, all of that just threw some light. Like PZ Cussons, like earnings has thrown some light into the fact that okay, wow, even with like the high inflation economy, what are they doing? How have they been able to recover from like a deficit that they had recorded, like just the previous earnings reports that they had shared. So I'm just going to move into it, right? So we already know the FMCGs. The sector serves the sector is serving a population of over 220 million across households, products, food, personal care, and electric goods. Right. So it is literally the most immediate economic indicator of household purchasing power. Right. When consumers are stressed, volumes fall regardless of price increases. Now, that's basically what the FMCG, that's actually one of the sectors, like it says, that does fastly, like you immediately are able to track the data on consumer spending, because these are everyday products that the FMCG, like it says, fast moving consumer goods. So so the most important number, like I'm getting into it now, is the PZ Cussons, I hope I'm pronouncing it right, explicitly states revenue growth was driven by a healthy mix of volume and price initiatives, and that the business grew volumes in both the electrical and consumer business. This distinction matters enormously because now the revenue growth driven purely by inflation is hollow, and the revenue growth that includes volume expansion means Nigerian customers are actually buying more, a direct signal that purchasing power, despite 15.93% inflation, has stabilized enough to support consumer goods demand. So the actual numbers for PC Cussons is that they recorded over 70 billion naira in profit after tax. That's like the earnings after tax, and that is up. They've literally recorded over 300% growth, which is from the last from about minus, they recorded a deficit last year, minus 17 points, minus over 17 or let's just say a loss of 17 billion naira, right? So this is actually significant. This is a very significant direction to in the markets, to see that okay, what has changed between then and now? Yes, there has been inflation, and then there has been inflation, should I say a drop in inflation. However, now an increased profit for one of the FMCGs, and it just shows one thing. Let's just say customers are gaining more purchasing power, which would say. However, the prices are maybe still okay. And what would you say about prices of like the normal goods that we're using now?
Okay, so the
The
prices of
day-to-day goods.
okay, the prices of the day-to-day goods currently are, they are still very high. It's not going higher than it used to be, but it's still on the high level that it has always been. Yeah, so the prices of our day-to-day goods are still, up there. I don't think any prices of anything is actually declining yet. Yeah, but the numbers would always say, but we're still patiently waiting for it to reflect in our day-to-day activities and buying.
The question I would ask would be like, is the volume growth, this FMCG volume growth in Nigeria, is this a sign that we are genuinely recovering as an economy, or are people just or are people buying more cheap goods because the expensive alternatives are just unaffordable? These are questions to actually ask, because are people actually just buying for the sake of, I need to survive.
Okay.
Right? Or rather, like, they actually do value these goods that they are buying. But then PZ Cussons actually does the everyday goods, like Morning Fresh, the Carex, the Rob. So I think those are like, you can't differentiate. I don't think you can use that to differentiate what asset class anybody is in, or purchasing class, because every household will need these things.
Yeah, we buy based off of value and worth, right? So no matter the how expensive it might be, or I don't want to use the word cheap because there's literally nothing that is cheap, right? But no matter how pricey it is, right, we'll definitely get it as long as it's going to serve our satisfaction, and handle what we need. So definitely going to get it, even if it's quite pricey.
Amazing. Okay. All right. Thank you. Thank you. I think that was fair. So from the physical economy of petroleum and consumer goods, now we'll be moving into the digital economy, because Nigeria's capital markets regulator just made a very deliberate move in the future of money. Now we're moving on to the future spotlight, which my co-host will be taking.
All right, so let's talk about the future of finance, right? So the SEC, that is Securities and Exchange Commission, cleared 7 fintech firms for digital assets. So the Nigeria Security and Exchange Commission, SEC, has granted approval in principle to 7 fintech and digital asset firms for admission into the Accelerated Regulatory Incubation Program, ARIP. The firms are the Bitbata Technologies Limited, the Luno Fintech Nigeria Limited, Get Equity Limited, CoinCoin Global Network Limited, Wrapped CBDC Ltd, Trovotech Ltd, and BlockVault Custodian Ltd. So these are the 7, fintech firms that has been cleared.
All right. So this, of course, fintech is always one of the sectors that I'm interested in, because of course, like the future of, should I say, the future of the economy does really lie in the technology that we use to accelerate financial inclusion. Okay, so Nigeria has actually, like, we are one of the world's largest, we make up one of the world's largest markets in terms of the users of crypto, like in the crypto markets, right? So that's according to Chain Analysis. You can check that out. And even Nigeria has we've actually done, like, I think one of the years that we had some regulatory setbacks within Nigeria, which I still think it has gotten better over the years. I think that was like 2019, 2021, like within that time, if not even like further, like
More.
you're right. But like it's been getting much better. So the intersection of crypto adoption, remittance flows, and the in-area CBDC represents the highest stakes digital finance policy environment on the continent. So this move to actually approve 7, not that they've said they've given them a license to operate just yet. They have just passed like the ARIP is like the approval in principle, which is like it confirms that these firms they've only met the admission requirements alone, and they can operate within defined parameters while the SEC still evaluates their business models. So all of these 7 these 7 fintechs, they are of different natures, and it just signifies that we are moving towards, like, I would say that this is like a very big policy move in terms of our fintech infrastructure and building an ecosystem that is reliant, or like that the whole ecosystem needs. Okay, so there's Luno, which is a licensed crypto exchange. It operates in Nigeria, but it's a US backed crypto exchange. And then there's Get Equity, which is an equity crowdfunding platform. Then there is Wrapped CBDC. They're building basically on top of the in-area digital currency. There's BlockVault Custodian, which is a digital asset custodian service. And then Bitbata is the crypto to crypto exchange. Then CoinCoin is the peer-to-peer foreign exchange platform. So, like, the SEC is not just regulating digital assets. It's actually building, like I said, an entire architecture within the ecosystem that is for the exchange, for custody, for crowdfunding, for CBDC, FX, and the settlement in they've done all of this in one regulatory batch, and it's very, very systemic, and I'm very impressed, I should say myself. But I think all of the moves, like we said, that I've been reading about, basically on fintech and the growth within this fintech ecosystem, the sector, and all of that. I'm reading on all of it, and I would say that the regulatory bodies, basically, they are making strategic moves, okay, because all of these things are important at the end of the day. Fintech is evolving, finance is evolving, the way you're going to include and capture different movements of funds, or different, the flow of money in different ways. Yes,
I also think
so. Having said that, those are things that you need to watch out for. So I would say that fintech, I think there was a discussion which is going to be part of the things that you need to watch out for on our watch list, is for the African digital infrastructure. There's some debate about what the future of like any fintech would possibly be, in the coming years, or what you would have to position as to gain not just access to funding, but access to the markets that are in that actually or should I say the next phase of needs in the Africa's global, money markets, right? And I read a LinkedIn article by, I do not know how to pronounce the name, which is sad, but I read a LinkedIn article that did a proper breakdown on what the future of the African digital infrastructure is going to be like. And one of the things that stuck with me was how we are moving towards you need to, how do I say now? Most companies are going to be thinking about capturing or being credit infrastructures, right? And in that means basically that you're going to be a system or a fintech, company that knows how to handle, basically give out money, have good credit, capture good, be able to capture credit, history, credit, score, credits, basically trustworthiness within the African space, or the African space. But then I'm just going to why basically this matters, why I'm mentioning this. It matters because we have a research that confirms that only 36% of Africans use the internet, despite 80% plus living with broadband signal reach. Now, the usage gap is driven by costs and skills, not coverage. This suggests that the infrastructure being built is not being effectively monetized by the people it is supposedly serving. So we're talking about telecoms, fintech, data centers, e-commerce, digital payments, government digital services. And the risk about this is that the investment capital continues to flow to infrastructure that doesn't translate into digital economic participation, creating stranded assets and widening the digital divide, even as coverage metrics improve. And now there's an opportunity here. The opportunity is that companies that will solve the last mile problem, that is the device affordability, data price reduction, digital literacy, will unlock the actual value of Africa's infrastructure investments. Now, we are, again, I said there's an ecosystem to which will draw back to, the move of the SEC in approving all of those different varieties of fintech operational, companies, right? Is that we are a supporting, it's an ecosystem at the end of the day. If you're going to need a banking system that's going to hold people's money and also record, accurately capture their credit performance or any other thing, I'm not just talking towards one industry alone, but one part of fintech alone, but we're going to need everything that supports it, which is I just mentioned, right? The affordability of data connectivity, like literacy as well. There's still a huge part of we've done some fintech have gone far in actually furthering our financial inclusion, which we can mention is even though it's not exactly an African company, but OPay, for
Yeah.
example, I literally anyone on the streets now would literally have an OPay account. You can walk up to anybody and ask, do you have a bank account?
Yeah.
And they would mention yes, because they have an OPay account. But now that like at the end of the day, that is just like OPay is only solves one of many problems within our space of financial inclusion. We have Money Point does solve problems as well. Like in fact, Dio just mentioned how there are many they're actually capturing for businesses as well.
Yeah,
They're
for
doing a lot in
businesses,
businesses, trying to be able to be that one fintech, that one company that a business can can run to solve every of their financial needs, loans, POS, everything, bank accounts and all the likes. Anyway, so we're just saying that we are going to be watching out for any major announcements on spectrum allocation, satellite broadband, or data center investment in West Africa that specifically addresses the affordability and usage gap, not just coverage. Yes, like we're definitely looking out for that. Some conferences showed me that even though I would not say we have enough of fintechs or enough of other payment platforms, but we need specific issues that solve, those connectivity problems, so that the average man can have access to things that, even if it will not just be about the premium class. There will not be such a huge divide when it comes to having access to, the other financial services that are offered by, companies. So, so that's definitely what we're going to be watching out for.
Yeah, and while Nigeria is still in the limelight of being Europe's largest jet fuel supplier in June, Dangote's refinery IPO has changed the valuation. So the June jet fuel exports milestone fundamentally changed the valuation narrative for the Dangote refinery IPO, which has targeted for second half 2026, and reports indicates a potential offering of up to 10% of equity on the Nigerian exchange, with features including foreign currency linked dividend options. So a refinery that can out-export the USA to Europe in the middle of a global energy crisis is a global energy infrastructure asset, not a domestic fuel security play. The June milestone will be cited in every IPO prospectus. For industries that will be affected by these are capital markets, the energy, institutional investments, retail investments, and pension funds. Also, the risks that will be attached to this is valuation expectation may outrun sustainable earnings if the Middle East crisis normalizes and European demand for Nigerian jet fuel returns to pre-crisis levels. And the opportunity we can see is that if Dangote lists on multiple African exchanges simultaneously, it could catalyze cross-border capital market integration in a way AfCFTA's financial services provision have not managed. And also, what you should majorly watch for is the SEC Nigeria filing of the IPO's prospectus, Aliko Dangote's press conference confirming timeline, and of course, whether the Ethiopian Securities Exchange is included in the multi-exchange listing plan as earlier reported.
All right. That's definitely something to watch out for. One of the major questions that we would ask concerning the whole Dangote refinery surpassing U.S., in supply of jet fuel to Europe would be that why we are in the middle of in Africa itself, or let's just call it Nigeria, having its own fuel crisis. And I think within the continent or within Nigeria itself, we do have surges in fuel prices, right? Which means like Nigeria is not even able to, we're a country that may not, our own supply within fuel supply within the country, within the nation is questionable, right? But then we have, a local refinery doing much numbers and position is, practically positioned globally, competing with the US to Europe. Like we're definitely going to be watching out for what this would do for whatever the IPO expectations would be or have were supposed to be. So yeah, and so on the third thing that we'll be watching out for this time is OPEC Plus approves 188,000 barrels per day output, and now what this means for Nigeria. So, according to a report today, the OPEC has approved a 188,000 barrels per day oil output increase. Nigeria's Q1 2026 crude production was already falling at 1.55 million barrels per day, against a budget target above 2 million barrels per day. An OPEC plus output increase, if Nigeria is allocated a higher quota, could provide fiscal headroom, but Nigeria has historically struggled to hit even its existing OPEC plus quota due to upstream underinvestments, oil theft, and infrastructure challenges. This matters because Nigeria's fiscal position depends heavily on our oil revenue. Producing at quota matters for both export earnings and FAAC allocations to states and local governments. Now, the opportunity here is that, or let's just first talk about the risk. The risk here is that Nigeria may receive a higher quota but lack the production capacity to fill it, which would be a miss relative to fiscal projections. Now, we're definitely going to be watching out for NNPC's July and August production data, any announcement of new upstream field agreements, or IOC production partnerships. All right. Now, this was a loaded episode, and I do hope that you did have your key takeaways, and all of these, you're going to be making your decisions based on all of the, information that we have dropped here. And if there's anything that, was intriguing to you, and we probably did not touch on all of the, points of view to analyze this, please do leave a comment and subscribe to our YouTube channel to receive updates on any of our shows that may go live, and follow us on all our social media platforms. This is Business 360 on Instagram, Facebook, TikTok, and LinkedIn. All right. Again, my name is Joy, and this is Across Markets.
And I'm Vera Ifechuku. This is Across Markets.
All right. Bye for now.